Have you ever stopped to wonder what would actually happen to your savings, your rent, and the price of your groceries? If 40 different countries woke up tomorrow and decided they didn't need American money anymore? The real answer might surprise you more than you'd expect, so let's dig into this together. For your entire life, and probably your parents' lives too, there has been one invisible rule holding the entire world together. If a country wants to buy oil, or steel, or electronics from another country, they almost always have to pay for it using United States dollars. It doesn't matter if the United States has nothing to do with the trade. If Brazil wants to buy oil from Saudi Arabia, Brazil has to get dollars first. This means the whole planet is forced to hold on to our cash just to survive. We printed the paper, and they sent us the things. That arrangement gave us a superpower that no other country has ever had. Because everyone always needed our dollars, we could just create more of them whenever we wanted, and the rest of the world would absorb them. We could run up massive national debts, fund huge government programs, and import flat-screen TVs and cheap clothes without totally destroying the value of the money in your wallet. The demand from outside our borders kept the value of our money propped up. Most of us just assumed this was a permanent law of nature. We thought the American dollar was untouchable because our military is the biggest and our economy is the strongest. We thought anyone who wanted to challenge us would have to do it with aircraft carriers and missiles. But that isn't how the world works anymore. The walls protecting our money aren't made of concrete, they are made of habit. If you didn't already know, China has spent the last several years building a completely new financial plumbing system. They created a digital version of their own money, the yuan. But this isn't like the crypto tokens you hear about on the internet. It is a state-sponsored network designed to bypass the American banking system entirely. They went to countries in Africa, South America, and Asia, and they made a very simple pitch. They told these nations that they no longer had to pay fees to American banks, and they no longer had to worry about the United States freezing their money if a politician in Washington got angry with them. They offered them a new app, a new network, and a new way to trade directly with each other without ever touching a single dollar. They didn't build a weapon, they just built a better checkout counter. For a long time, the experts in the United States laughed at this. They said nobody would ever trust the Chinese government enough to use their network. They said the dollar was just too convenient and too deeply wired into the global system to ever be replaced. We kept acting like our financial supremacy was a birthright. We ignored the fact that resentment was quietly building. Dozens of nations were growing incredibly tired of jumping through American hoops just to buy energy and food for their own people. They were just waiting for a viable alternative to appear. And the moment that alternative proved it actually worked, the clock started ticking on the American way of life. Because if that invisible global demand for the dollar suddenly vanished, the hidden system that actually pays for your daily life would collapse. To really grasp why this new digital network is so dangerous to our way of life, you have to understand a secret about how the American economy actually functions right now. Most people assume our national wealth comes entirely from what we build, what we invent, or what we grow here at home. We think we are rich because we are highly productive. And while that was absolutely true a few decades ago, it is only half the story today. The real engine of our modern wealth is a completely invisible demand for our printed paper. Because every other nation on Earth needs dollars to trade with each other, they are essentially forced to buy our money and hold it in their vaults. They trade us physical goods, raw materials, and manufactured products, just to get their hands on the green paper we can print out of thin air. We traded them numbers on a screen, and they shipped us the world. Think about how strange this arrangement actually is. If you strip away all the complicated banking terms, imagine you could write an IOU on a napkin, and the grocery store down the street accepted it as payment for your weekly food. Now imagine the gas station took those same napkins, and so did your landlord. As long as everyone trusts your napkins, you never actually have to produce anything of equal value to pay them back. You just keep writing IOUs. That is exactly what the United States government has been doing on a massive global scale for over 50 years. When a country like Saudi Arabia sells oil to a country like Japan, Japan pays for it in United States dollars. Japan has to manufacture cars, sell them, to us for dollars and then hand those dollars to Saudi Arabia for energy. The United States gets the cars, and the rest of the world scrambles to hold onto our currency. Your standard of living is heavily subsidized by the rest of the planet's need for our money. Think about the last time you bought a really cheap electronic device, or filled up your gas tank, or bought clothes imported from overseas. The only reason those things are affordable for the average American is because the dollar is artificially strong. The massive, forced demand from billions of people who don't even live here keeps our money incredibly valuable. It allows our government to borrow trillions of dollars to pay for roads, military bases, and social programs without causing the kind of massive price spikes that would destroy any other country. If a smaller country tried to print and borrow money the way we do, their citizens would need a wheelbarrow of cash just to buy a loaf of bread. But we get away with it because we export our inflation to the rest of the world. We print the money, they absorb it, and we get to keep living beyond our means. We built a house on a foundation of global reliance, and we forgot it wasn't made of stone. But this entire magic trick only works if there is absolutely no other option. It relies on the rest of the world having no alternative checkout counter when they want to buy oil, copper, or wheat. For decades, whenever a country tried to step outside this dollar system, they were either economically crushed with penalties or completely cut off from the global banking network. The United States held a total monopoly on the plumbing of international trade. You used our pipes, or you didn't trade at all. But what happens when the countries doing the actual manufacturing and the countries pulling the actual resources out of the ground quietly spend years building their own pipes? What happens when 40 of them agree to flip the switch on a completely new network, all on the exact same morning? Imagine a completely normal Tuesday morning. You wake up, you start your car, you head to work, and everything seems fine. But while you were sleeping, an agreement that took 10 years of quiet diplomacy to build finally went live. 40 nations, representing more than half of the world's population and almost all of its critical raw materials, switch on a new financial network at the exact same time. There are no dramatic speeches. There are no military standoffs. It simply looks like a computer screen refreshing in central banks from Brazil to Saudi Arabia to Indonesia. It didn't start with a weapon. It started with a software update. To understand what breaks in this moment, you have to look at how international trade worked the day before. For your entire life, if the United Arab Emirates wanted to sell oil to India, the payment almost always had to bounce through a computer server in New York. An American bank had to process it, take a tiny fee, and approve the movement of United States dollars. That meant our government always had its hand resting on the global power cord. We could unplug anyone we didn't like, but on this specific Tuesday, India buys 10 million barrels of oil, and the payment clears in 3 seconds. It bypasses New York entirely. It never touches a dollar. It uses a digital token, running on the new Chinese network, moving directly from one nation's digital vault to the other. Think about the last time you downloaded a new app to send money to a friend because the old one started charging ridiculous fees. You just deleted the old app, tapped the new icon, and moved on with your life. Now imagine 40 entire economies doing that on the same morning. The reason they do it isn't just to save on fees, it is about taking back control. For decades, these countries lived with a silent compromise. They needed American dollars to trade, but relying on the dollar meant the United States could dictate their policies, track their purchases, and freeze their national savings with a single phone call. They traded their independence for our financial plumbing. But the new digital network offers them an escape hatch. It guarantees that their money is their own again, free from the oversight of politicians in Washington. By lunchtime on the East Coast, the screens in every major trading room in Manhattan start turning a deep, consistent red. The system isn't crashing, but the volume is just vanishing. The massive river of invisible money that usually flows through American financial institutions is suddenly drying up. At first, the experts on television try to calm everyone down. They confidently declare it is just a political stunt. They insist the new digital network could never handle the complex reality of daily global trade. They say the dollar is simply too trusted to fail. But then the second wave of announcements drops. Saudi Arabia officially states that from now on, any country buying their oil will receive a 3% discount if they use the new digital network instead of the American dollar. That is the exact moment the invisible wall cracks. Because 3% in the global energy market is not just a polite discount. It represents hundreds of billions of dollars a year in savings. Suddenly, every nation still using the old system is at a massive disadvantage. Why would any struggling country desperately buy expensive American dollars when they can use the new network to get cheaper energy instantly? The habit that held up the American way of life for half a century is broken in a single afternoon. But the real nightmare hasn't even started yet, because you have to ask, what happens to all those trillions of printed dollars when the world suddenly decides to send them back? To understand the sheer panic of this moment, you have to picture where all our money actually lives. Right now, there are trillions of physical and digital United States dollars sitting in bank vaults all over the planet. They are sitting in London, in Tokyo, in Frankfurt, and in thousands of smaller banks across the 40 countries that just flipped the switch to the new digital network. These countries held onto our money because it was the only way they could guarantee their ability to buy oil and food. It was their survival fund. But on the afternoon the new system goes live, that massive pile of American currency suddenly loses its purpose. It becomes a completely useless asset sitting on their books. When a central bank in Brazil or South Africa realizes they don't need dollars to buy energy anymore, keeping billions of dollars in their vaults is just bad business. So they start getting rid of them. They trade them away for something they actually want. Those 40 nations begin dumping their dollar reserves. They use them to buy up physical gold, real estate, copper, and anything else of tangible value. They realize that paper wealth is just an illusion, and what really matters is resource wealth. They want things they can actually touch and use. And as they dump our currency, all those trillions of dollars have only one place left to go. They flood straight back into the United States economy. The greatest export in American history is suddenly returned to sender. Think about what happens when an ocean of money pours back into our country all at once. Suddenly, there are trillions of new dollars floating around our banking system, chasing the exact same amount of houses, cars, and groceries. You already know what that is called. It is inflation, but not the slow, creeping kind you are used to hearing about on the news. This is a tidal wave. Imagine walking into your local grocery store on a Friday and the price of a gallon of milk is $4. You come back the following Wednesday and it is $12. You didn't get a raise at work, you didn't change your spending habits. The money in your pocket just violently lost its purchasing power because the rest of the world stopped absorbing it. Think about the last time you checked your bank account and felt okay about it. That feeling depends entirely on a system most people never think about until it breaks. You assume the numbers on your screen represented a fixed amount of safety. But when the global demand for the dollar evaporates, your savings account is effectively drained without a single penny ever leaving the bank. The unipolar financial world, where America dictated the value of money for everyone else, just ended. And it ended right inside your wallet. The government tries to step in. Of course, the central bank, the people who actually control the money supply, hold emergency meetings. They try to figure out how to mop up all these extra dollars flooding the streets. Normally, they would just raise interest rates to cool things down. They would make borrowing money so expensive that people stop spending, which eventually brings prices back down to earth. But there is a massive, terrifying catch to doing that this time. Because when the world stops using your money to trade, they also stop buying your government debt, which means the old survival playbook is about to become a trap we cannot escape. When the government realizes they're trapped, that they can't just raise interest rates to soak up all those returning dollars, without bankrupting the country, the reality of that failure lands directly on your kitchen table. You have to understand that for the last 40 years, the American lifestyle has been built on a very specific illusion. We got used to the idea that we could walk into any big box store and buy a coffee maker for $30, or a pack of t-shirts for $10, or a new television for a few $100. We thought those things were cheap because of efficient manufacturing or better technology, but they were really only cheap because the people making them in other countries were willing to accept our artificially strong dollars in exchange for their hard labor. The era of the endless discount just quietly died. Now, think about what happens when those foreign factories are suddenly operating on a new digital network. They don't want our paper anymore. If an American company wants to import shipping containers full of electronics or clothing or auto parts, they suddenly have to pay a massive premium to convince anyone to take United States dollars. The manufacturers in Asia and South America look at our currency, see that it's bleeding value every single day, and they simply raise their prices to protect themselves. By the time those goods actually make it off a cargo ship in Los Angeles and onto the shelves of your local store, the price tag has doubled or tripled. A basic refrigerator goes from $800 to over $2,000. Buying a new laptop suddenly requires dipping into your retirement savings. You're no longer a priority customer in the global mall. But the pain doesn't stop at electronics and imported clothes. You might think that because we grow so much food, here in the United States, your grocery bill would be safe. But modern farming is a deeply international business. American farmers need massive amounts of fertilizer, which is mostly imported. They need fuel for their tractors, which relies on global oil markets. They need replacement parts for their machinery, which are manufactured overseas. When the dollar loses its special status, every single one of those ingredients becomes violently expensive. So the farmer has to charge more for the wheat, the trucker has to charge more to deliver the flour, and the bakery has to charge more to make the bread. You're paying the price of a fallen empire every time you scan an item. This is where the squeeze becomes unbearable for the average person. Your wages don't go up just because the currency lost its power. If you make $60,000 a year, you still make $60,000 a year. But suddenly, it costs you $90,000 just to maintain the exact same life you had a year ago. You stop eating out, you stop taking vacations, you cancel subscriptions and delay fixing your car. And because you and millions of other Americans are suddenly cutting back on everything, the businesses that rely on your spending start to choke. Retail stores close their doors, restaurants lay off their staff, and the service economy grinds to a devastating halt. People start demanding that the government do something, anything, to stop the bleeding. They scream at politicians to fix the prices, to print more relief checks, to save the American dream from slipping away. And the politicians, desperate to keep their jobs, turn to the only traditional weapon they've ever known. But they're about to discover that the old medicine has suddenly become a lethal poison. So here's where the trap finally snaps shut on the people in charge. When things get this bad, we've always been told that there's a group of experts in Washington who can just fix it. You've heard of the central bank, which is just a fancy name for the people who actually control how much money is flowing through our economy and how much it costs to borrow it. Normally, when prices start to spiral out of control like they're doing in this story, the central bank has one main move. They raise interest rates. They make it more expensive for you to get a car loan or a mortgage, which forces everyone to spend less, which eventually forces prices to stop climbing. It's painful, but it usually works. But in this scenario, that one move is exactly what destroys the entire system. The fire is inside the house now, and we're the ones holding the mortgage. To understand why, you have to look at the massive mountain of money the United States government owes. We're talking about more than $34 trillion of debt. Think about that number for a second. 34 trillion. It's a number so big that it's almost impossible to wrap your head around. The way the government manages that debt is by selling what they call treasury bonds. A bond is basically just a piece of paper where the government promises to pay you back with interest later if you give them cash right now. For decades, those 40 countries we talked about were the biggest buyers of those bonds. They were the ones lending us the money to keep our country running. The government's credit card just hit its limit, and the bank is calling from overseas. But remember, those 40 countries just switched to a new digital network. They don't want our bonds anymore because they don't need our dollars. Suddenly, the United States government is sitting there with a massive pile of bills to pay, and the people who used to lend us the money have all walked away from the table. This puts the people in charge in a terrifying position. If they raise interest rates to stop the prices of your groceries from exploding, the interest they have to pay on that $34 trillion of debt shoots through the roof. We're talking about a situation where the interest alone could eventually cost more than our entire military budget and all our social programs combined. We've reached the point where the math simply stops working. If the government can't borrow more money from other countries, and they can't afford the interest rates if they raise them, they only have one option left. They have to print the money themselves to pay off their own old debts. This is the moment the spiral turns into a whirlwind. The government starts creating trillions of new dollars just to keep the lights on and pay their bills. But as they flood the streets with even more cash, the value of the dollars already in your bank account drops even faster. It's like trying to put out a fire with a bucket of gasoline. The more they try to save the system by printing money, the more they destroy the actual wealth of every single person living in the country. You can't print your way out of a world that doesn't want your paper. Think about what this actually means for you and your family. In the past, when the economy got shaky, the government would send out stimulus checks or lower interest rates to help people get through the tough times. But in this world, they can't do that. If they lower rates, inflation gets even worse. If they send out checks, they're just adding more fuel to the fire. For the first time in nearly a century, the people in Washington are completely powerless to stop the decline. They're watching the American dream evaporate in real time, and every tool they have in their shed only makes the problem worse. The safety net you've always assumed would be there is being shredded by the very people who are supposed to hold it up. Everything we thought was a solution has become part of the problem. And as the government fumbles for a way out, the rest of the world isn't just sitting around and waiting for us to figure it out. Those 40 countries that moved to the digital yuan are already building a new version of the global economy that doesn't include us. They're making new deals, building new factories, and creating a future where the United States isn't the leader anymore. It's a quiet, permanent shift in how power works on this planet, and it's happening while we're still trying to figure out why a gallon of milk costs $15. The world is moving on, and they're taking the supply chains with them. Think about the last time you saw a massive cargo ship in a video or at a port. Those ships are the literal veins of the global economy, carrying everything from the chips in your phone to the grain that feeds millions. For a long time, every single one of those ships, no matter where it was going, was essentially sailing on a sea of dollars. If a factory in Vietnam wanted to sell shoes to a store in Germany, the contract was written in dollars. The insurance for the ship was paid in dollars. The fuel for the engines was bought in dollars. This meant that the United States was the center of every single trade route on the planet. We weren't just a participant in global trade. We were the platform everyone else had to build their business on. But when those 40 nations switched to the digital yuan, they aren't just changing their currency. They're changing their geography. Think about what that actually means for you and the things you buy every day. If you didn't already know, a supply chain is just a fancy way of describing the incredibly long line of people and machines that get a product from a raw resource in the ground to a box on your doorstep. Right now, those chains are designed to end here in the United States because we have the strongest currency. Everyone wants to sell to us because our money is the ultimate prize. But in this new world, the prize has changed. Those 40 nations, which control most of the world's manufacturing and natural resources, start realizing it's much easier and cheaper to just trade with each other. They stop worrying about whether their products can reach a shelf in a store in Ohio, and they start focusing on the billions of new customers in their own digital network. The global economy isn't a single pool anymore. It's a series of walled gardens. Imagine you're a business owner in Thailand or Brazil. For decades, you've dealt with the headache of converting your local money into dollars just to buy materials from China. You had to pay fees to American banks, wait days for payments to clear, and follow rules set by people thousands of miles away. Now, suddenly, you have an app on your phone that lets you pay your Chinese supplier instantly with zero fees, using a currency that isn't losing value every day. Why would you ever go back to the old way? You wouldn't. You'd start signing long-term contracts with other members of your new club. You'd build new ports and new railroads that connect you directly to your neighbors, bypassing the old American-led shipping routes entirely. We're becoming the high-maintenance customer that nobody wants to deal with. This is the deeper consequence that nobody is talking about. It isn't just that things get more expensive for us. It's that some things might stop coming here altogether. In a world where 40 of the most productive countries are trading exclusively with each other, the United States starts to look like a lonely island. If a manufacturer has a limited supply of high-end computer chips or specialized medical equipment, they're going to send them to the customers who can pay them in a stable, useful currency. If the dollar is volatile and hard to use internationally, we get moved to the back of the line. We find ourselves living in a country that can't produce everything it needs, but no longer has the global standing to demand that others send it to us. The maps are being redrawn, and we're being left off the legend. Think about the sheer scale of that shift. For 100 years, the phrase "made in America" or even "sold in America" meant something specific about power and priority. We were the destination. But as these new trade blocs solidify, the center of gravity moves east. The most advanced technologies, the newest fashions, and the most vital resources start flowing between Beijing, Riyadh, and Jakarta, while we're left trying to figure out how to rebuild factories we tore down 40 years ago. We're forced into a desperate race to become self-sufficient in a world that has already moved on without us. And the most haunting part of this isn't the economic data or the shipping manifests. It's the realization that this massive, world-altering shift didn't require a single explosion or a declaration of war. The world didn't just find a new currency, it found a new best friend. So if this shift is so obvious and so devastating, you have to ask yourself the most important question of all. Why didn't we see it coming? Or more importantly, if the people in charge did see it coming, why did they let the system become so fragile? That a software update from a rival nation could bring the whole thing crashing down? The answer to that leads us to a truth about power and silence that most people aren't ready to hear. So here is the real question that keeps historians awake at night when they look back at a shift like this. If losing the global currency game is this devastating to the United States, why did we let it happen so quietly? Why wasn't there a massive standoff, a military intervention, or at least a warning siren going off in Washington? We spend close to $1 trillion a year on our military to prevent our way of life from being threatened. So how did 40 nations manage to pull the rug out from under us without a single shot being fired? The answer is that we were looking for the wrong kind of weapon. For decades, the people in charge of protecting American interests assumed that any real threat to our power would come in the form of a military buildup. They watched the oceans for submarines, and they watched the skies for missiles. They assumed that because our military was untouchable, our financial empire was untouchable too. But they fundamentally misunderstood how global power actually works in the modern era. They forgot the most critical lesson about how the world does business, which is the sheer fragility of financial trust. In the world of global economics, trust is not an emotional state. It is a structural necessity. We thought they used our money because they were afraid of us, but they were actually just using it because it was the only plumbing that worked. Think about how we treated the rest of the world for the last 20 years. Every time a country did something Washington didn't like, we didn't always send in the troops. We just cut off their access to the dollar system. We froze their bank accounts. We made it impossible for them to buy medicine or sell their oil. We treated the global financial system like it was our own personal weapon. And for a while, it worked perfectly. But every time we used that weapon, we reminded every other country on Earth of a terrifying reality. We forced them into what you might call a liquidity and sovereignty paradox. They had to choose between the convenience of our money and the independence of their own nation. If a country wanted to have access to the most easy-to-use currency on the planet, they had to give up a piece of their national sovereignty. They had to accept that politicians thousands of miles away could ruin their economy overnight if they disagreed on foreign policy. For a long time, countries swallowed their pride and accepted the deal because there was no alternative. But nobody likes living with a financial gun pointed at their head. So instead of building armies to fight us, they just quietly started building a different set of pipes. They gathered their engineers and their economists, and they wrote a new software code. They didn't defeat us, They just figured out how to bypass us. When those 40 nations finally flipped the switch to the new digital network, our aircraft carriers were completely useless. You cannot bomb a digital network that runs on thousands of servers spread across 4 continents. You cannot send a battalion of soldiers to force a Brazilian farmer to accept United States dollars for his soybeans. The military might of the American empire was completely paralyzed by a software update. The intelligence agencies didn't miss the threat. They just fundamentally misunderstood what a threat looked like in a connected world. We spent $1 trillion a year building a fortress, and the rest of the world simply built a road that went around it. And this is where the story stops being about global politics and starts being entirely about what happens next to you, your town, and the country you grew up in. Because when a superpower realizes its greatest weapon no longer works, and when the invisible wealth that paid for its lifestyle evaporates, the entire structure of society has to be rebuilt from the ground up. When a country can no longer just print money to pay for its lifestyle, it faces a harsh, unavoidable reality. It has to actually go back to making things. For half a century, we enjoyed what you might call the era of paper wealth. We could generate prosperity by trading financial instruments, creating apps, and moving numbers around on a screen. We outsourced the hard, dirty work of actually building the physical world to other countries. Because our currency was so strong, it made importing everything cheaper than making it here. But when those 40 nations walk away from the dollar, that entire economic model collapses. We are suddenly forced into a painful era of industrial realism. We have to rebuild our own domestic manufacturing base just to balance our trade accounts, and that transition is brutal. Think about the abandoned factories and rusted steel mills scattered across the country right now. For decades, they were just monuments to a bygone era. But suddenly, resurrecting them isn't a political talking point. It is a matter of national survival. Because when the rest of the world stops taking your paper IOUs, you have to trade them something real. If we want copper or rare earth minerals or electronics, we have to manufacture goods that other nations actually want to buy. The entire definition of a good job flips upside down. The financial consultants, the marketing executives, and the corporate lawyers suddenly find themselves in an economy that doesn't value paper pushers anymore. The people who know how to weld, how to farm, and how to operate heavy machinery become the backbone of the new economy. Value is no longer measured in credits or paper notes. It is measured in the things that humans actually need to survive. And as we are forced to look inward and rebuild, the rest of the map is being redrawn into something we haven't seen in our lifetimes. The world isn't just a single global marketplace anymore. It splits into 3 or 4 different groups. Each group has its own leader. Each group has its own type of money. One block revolves around the digital yuan and Asian manufacturing. Another might form around a resource-rich alliance in the global south. Each group builds its own supply chains and writes its own rules. The era where one country dictated the financial reality for everyone else is permanently over. We are no longer the undisputed center of the universe. We are just one regional power among several, trying to negotiate trade deals in a fragmented, divided world. In this scenario, the primary implication is not the end of the global economy, but the end of the unipolar financial world. Think about what that actually means for your daily life. It means the days of thoughtless consumption are gone. You don't buy a new phone every 2 years, because the materials to make it have to be negotiated across rival currency blocks, making it incredibly expensive. You repair your car instead of leasing a new one. The endless abundance of cheap, disposable goods that defined American life for a century vanishes, replaced by a culture of scarcity and preservation. It isn't necessarily the end of the world, but it is the end of the world as you knew it. We have to learn how to live within our actual means, based on what we can pull out of the ground and build with our own hands, rather than what we can borrow from the rest of the planet. But adjusting to that new reality requires accepting a truth that most people will spend years trying to deny, fighting a ghost that just isn't there anymore. The hardest thing to accept about this whole scenario isn't just the higher prices or the struggling economy. It's the realization that the world we grew up in, the one where America was the undisputed leader of everything, is just gone. For your entire life, you've lived with a quiet sense of security that came from knowing our money was the foundation of the planet. Even when things were bad at home, we still had that invisible edge. We were the main characters in the story of global finance. But in this new world, we're just one of several actors on a much smaller stage. Think about what that actually means for you and your kids. It means the American dream has to be completely redefined. It's no longer about having the biggest house and the newest car every few years, just because we can borrow the money to pay for it. It becomes about something much more grounded. It's about resilience. It's about how well we can adapt to a world that doesn't owe us a living anymore. If you didn't already know, the feeling of status isn't just about pride. It's the reason your passport let you travel anywhere, why your degrees were respected everywhere, and why your currency was accepted in every tiny corner of the globe. When that status vanishes, the world gets a lot bigger and a lot less welcoming. Power didn't leave because of a war. It left because it found a better deal. We spent so long focusing on the threats we could see, the missiles, the hackers, the political rivals, that we completely missed the one threat that actually mattered. We let our financial system become so heavy, so loaded with debt, and so reliant on forcing other people to use it, that we forgot trust is something you have to earn, not something you can demand forever. The 40 countries that left didn't hate us. They weren't trying to destroy us. They were just tired of paying for our mistakes. They found a new software, a new network, and a new way to interact that was simply more efficient than the one we were providing. This is how a superpower actually fades in the 21st century. It's not a dramatic explosion or a cinematic collapse. It's a series of quiet departures. It's a bank in Lagos choosing a different app. It's a refinery in Mumbai signing a contract in a different currency. It's a shipping company in Rotterdam changing its insurance provider. Each of these decisions is tiny on its own, but together, they're the sound of an empire being dismantled, one line of code at a time. The silence is the most terrifying part. There's no one to fight back against, because there's no enemy at the gates. The gates are just being bypassed. Think about the last time you felt truly secure about the future. That security was built on a system that we took for granted, a system that relied on everyone else playing along with our rules. But the rules have changed, and the game has moved on. We're left holding a stack of paper. In a world that's moved to digital tokens and physical resources, we have to learn how to be a normal country again, one that produces as much as it consumes and respects the boundaries of its neighbors. It's a humbler, harder life, but it might be a more honest one. The reality we're facing isn't a temporary dip in the markets or a bad election cycle. It's a permanent shift in the architecture of the human world. We've moved from a unipolar world, where one city made the decisions for everyone, to a multipolar world where power is scattered and shared. We can either fight against that reality and break ourselves in the process, or we can find a way to fit into this new, fragmented landscape. But the one thing we can't do is go back to how things were on Monday. The software update is complete, and the old system has been deleted. This is a hypothetical scenario. Real outcomes would depend on factors no model can predict. This is not financial advice.